Give it a minute for everybody to funnel in here. Then we'll start. Got a ton of requests already of names that we need to go over. I'll put that on pause. Bear with me here in 1 minute, and then we'll be set. And let me just send this link one more place, and then we're ready to go. Okay. So I am good to go. Let's light this candle. Let me share the screen, and we are good. Hey, everybody. All right, so let's get rid of this banner and let's start. So I have a ton of requests already, but let's just get right into it. Let's see what we're looking at today. I gotta drill down here. Hey, Ro. Task NTAP. Diane, the video link is, if you're in the community, it's in the community. If you're not in the community, I post it on Twitter at 6:30 every night, directly on Twitter as well. Hi, Tobias. Hi, Joshua. Jen, I'm going to get into that. Hey, Stefan. Good to see you. So let's just start drilling down into this. And we'll go over the markets overall and what's going on, but let's just start. So task, I mean, I see what you're looking at, right? So you're right in here where you are holding that 8-day moving average and you're trying to flip it, right? So what we're looking for here is we're looking for this to flip that level. That's what you're looking for out of it. Now, if you look at the weekly, it's going to be kind of wonky because you're probably going to be at the lower end of the range, right? Because your close is going to be below here. So let's take a look at that weekly for a minute and you'll see what I'm talking about, right? So the weekly is not going to look as great. It's going to look maybe kind of tired, right? But that's not really the case. The case is that you're kind of hanging in there. Now, what you have to do is if you're interested in going long this, you just have to watch this wedge line and see how it wedges in between support, the wedge line, and the 8-day moving average. So something to consider. What was the other one? NTAP. So, you know, I don't like really how you ended here. You see how you ran up and then failed? You saw a lot of this on Friday, and I'm going to get into that on the market. Like I'm going to address the market as a whole when I get to that question, so we can go over that, and we'll go from there. Hey, Joshua. So, Jim, you know, let me go through that now. I would hold off on the NTAP based upon that wick row. Let me just go through this. So, I'm just going to use this because this is the cleanest one to use. Okay, but you can use the IWM doesn't look great either. So every single time that these are the notes that I have actually for the community and the newsletter that went out tonight. But this is what you're dealing with. Every single time we've broken this line, okay, every single time we broke this 21, we go where? Right? Every time. 1, 2, 3, 4, 5, 6, 7, 8. I mean, it's like clockwork. So I think that what do I think is going to happen? I think that you could see another drop down to here on the S&P down 1%, and then we better hold. And if we don't hold, we're going to have a problem. But that's what I would focus on. That's the level that I would look at. And that's what I think is going on overall with like the S&P. So I think you could see more weakness. And then after seeing that weakness, you could kind of, you might be bottoming is where I'm going with it. What I think is going to happen is I think you're going to see more weakness. And then I think you're going to rally back up. That's how I'm looking at it. So, hey, Dale. So I can get more specific, Jen, but I think you're going to sell down and then bottom. Hey, Jay. Hi, Emily. You're welcome, Di, anytime. Hey, Ethan. Hey, Dan. So IIPR, I mean, look, newsletter-wise, I got stopped out, okay? And I got stopped out because I have to honor the stop if it closes below there. It's just the only way that I can have some congruency with the newsletter so people can understand exactly when I'd be out. I made 24 points. It's not really what I wanted. We made 10% on it from when we got in at 212, but that's not the move I really wanted. The move I really want is the 3 handle on it. So to go through that, I actually, and if you're in the group, the community, I took a position Friday. I'm holding over the weekend. I think this was a gross sell down, and I'm going to kick myself, on the newsletter, but it is what it is. So I don't like when you have this pattern, you don't go right back up. It doesn't work that way. But what happens is if you fail here, you don't hold the secondary, well, then I'm going to have a problem if it takes out the lower low, your trade's over. But if it takes out this lower low, get out of the way. I mean, if you take out 233.66, you need to get out of the way because that means that we could go down to here, right? But this wedge line, it broke, it made a decision, and we broke the 21-day. We have not broken the 21-day and closed below the 21-day since this run began. It hasn't happened. So it's significant. So you have about 1 to 3 days to really flip it and get back over it and then continue. But even then, you're going to come up, roll, come back down, and then maybe push if you don't break here. So that's IIPR. I like the name a lot, but I think there's a lot of uncertainty. People are talking now that maybe these cases aren't going to be as great as we think, and then that could lead to some other things. So we're going to, we just have to really watch how this whole thing plays out. Let's do AMEH. AMEH, we've been in since 80. Look, I like it. Okay. I like it. I like the action. What you need to concern yourself with on this trade is this level, $99. You see how you stopped right at the top of this red long nasty bar? You stopped right here. Now you're forming what? You're forming a doji, okay? I'm on a rising wedge line and I'm forming a doji and I'm right against resistance, right? This is when people were asking me Friday if they should be adding to it and why I was saying no. So, you have to watch this because if you undercut this, okay, this could get ugly. Now, I left a wide stop on this on purpose because I think that this can easily go to that 114 level. I have 106. I split the difference between the two levels. That's how I came up with the target. But I think you could easily get to the 114, 115 level with this. Look at this volume. See how that volume's picking up? That's exactly what you want to see. I mean, that's what you want to see across the board. So I think that that's something to consider. ZM. So I like ZM. I have a position in ZM. I'm just going to throw that caveat out there. Now, I don't like how I closed because I purposely closed me below that range. But I did get over it. But that's not as nasty as a move down as we once saw. So I'm in there, and I'm going to hold it unless it breaks my stop. My stop's if I undercut this, I'm out. Other than that, I'm going to stay in it. I think we could base here. I think it's grossly over this level, and I've been looking for a sign, and I think we started to get the sign of it the other day. I mean, I don't know how much people look at this, but one thing that I would tell you to look at, and I'm trying to get that volume line bigger and having an issue. But one thing I would tell you to look at with the volume is this is really what you want to look for. So you see how that wedge line on the volume came down and then you broke out of it? That's exactly what you want to see. Exactly. So ADGI. Let's do it, Dan. So, okay, 44.69. So you're breaking out there. I mean, I like that breakout. You just have to see how that's going to play out. You're kind of ahead of it now, right? So you could use shorter time frames to find a way in, but really what you want to focus on is you're really going to want to focus on getting above that 54.94. And getting above that's going to be everything. That's what you really need to do. This is really your stop. So like, you don't really want to use a $10 stop, right? So how are you going to do this? The only way that you can really do this is to focus on getting up to the top of this level, right? I mean, that's really what you have to do. So that's really what you're trying to focus on there. That can work. The volume picking up and everything, that can work. FSLR. Let's go through that and see what's going on here. So I would be concerned about anything that did this. Anything that you see like this, okay, I would have a really tight stop on it. So a really tight stop. So like where I would be is right here. I'd be at 99.40. Okay, that should be the low. Let me just double check that, make sure I'm right. 99.40. Like you don't want to be below that. So just consider that, okay? You tried twice to break out here, and you failed both times, okay? And both times your sell volume is greater, right? You see your sell volume is greater here and here than your buy volume? That's a clear indication. This is a pattern. It has another name. It has an advanced name. Escapes me right now. I call them devil horns because they're two red horns that pick out, right? And this can get super nasty. Like that pattern is a super nasty, like it's a very easy short for those people that want to short something. So this is a really high probability trade on the short side. If I take out that low, you at least revert to the mean, which would be the 2021 day, which gets you to $94, $95. So, but I would not be chasing that. AIHS. AIHS. So you tried to rally, you couldn't do it. I usually don't look at these little guys, but I'm just going to walk you through it. Tried to rally, couldn't do it. Go from there. You need this to break. Once that breaks, you can take a look at it. ETHE. So, let's start here for a moment. So I put this in at the end. I don't know if you guys watched the top 10 video or not. If you did, you did. If you didn't, you didn't. But what I was pointing out yesterday was this pattern. And the pattern I'm referring to is a failed H pattern. Okay. And this is Ethereum. And it's a failed H. To me, it already has the failed H in by looking at it. Now, Ethereum will probably have the failed H in tomorrow. Okay. And all you're looking for is a trade, but you're looking for a trade back to this level, which is not a bad move, right? Like if you can bounce like that, okay, you can come back to the 17, 18%. You can move like that on this, right? And still be in your downtrend, right? You could still be in that downtrend. And I'm going to spend a little time with this. But if you haven't watched that top 10 stocks video, I'll put the link in this description of this live video later, but I'd recommend that you watch it. It's also in my playlist of top stocks to watch. And I also linked it in description. I use this as an example of what I thought was going to be a failed H. And it looks like I'm right, where we've gotten above that lower high. We didn't break this low right here. So this is kind of telegraphing, isn't it? What's going to happen tomorrow with this. So if I could get in this basically, which I don't think you will, but if I could get in this even flat, right, you'd be all over this, because clearly you're going to have more of a discrepancy with the ETH. In this, I'm going to call it, they call it a trust. I'm going to call it an ETF, but you can flip this level. If you flip this level, you're going to go. You're going to go. And you're going to wind up going fairly decently up to this 38. So I think that can go. I like that trade a lot. And I would argue that you might want to look at some of these others too now, because I think that you've bottomed on this again. This stuff might start bottoming. You're going to have to just really be very quick if I'm wrong. So, but if you look at, like, here's Bitcoin, same thing, right? But Bitcoin doesn't look as pretty as Ethereum. So that's the one I would, if I had to pick one, I know I'm going off on a tangent here, but I think this is important. I would focus on this. I'd focus on Ethereum. So Stefan, do you ever use the VIX as a hedging tool? Is there ever an appropriate time to use it? You can use it whenever you want. You can use it whenever you want. Look, I have people that will, the rule of thumb is they'll buy some volatility exposure when it gets over 20. So you can write that down as a level. They'll buy volatility exposure when it gets over 20, because the probability of a close over 20 and then it going up to 30 are pretty good. So to me, I think that could happen this week. You could see a spike. It's possible. You see a spike and then that's the end of it. We never know, but do I personally? No. I mean, to me, I would rather reduce, or my experience is, and I think it makes sense, if I want to buy volatility, then I'll buy volatility. If I want to buy something as a hedge, then I will hedge directly that investment. So let me give you an example, because this is a really interesting question. Let's just take Tesla. Okay. So here's Tesla, and let me get rid of your question for a minute. So here's Tesla. Let's say that I'm in at 730 and I want to hedge it. Okay. All I would do is sell calls. Okay. I would sell calls against my position to hedge the position, right? So I'd sell calls with like a 770 strike, whatever I get and I would only do weeklies, and whatever I get, right? If I was really that concerned about it, I'd blow out the stock. That's what I'll do. I will hedge the individual position. When you are trying to hedge, as close as you can possibly get to the individual stock or commodity is where you want to be. You do not want to be buying the VIX because of your portfolio. If that's the case, I can give you another way to hedge. I might as well. Okay, so you could take a look at your portfolio and say, let's say you have $10,000 in your portfolio or $100,000 in your portfolio, okay? And you're long tech stocks. You can go to TQQ, not SQQ, and you could short this against a percentage of what your market exposure is, right? And that's another way to hedge. But that would get you closer to the equity line than shorting the VIX. The VIX can spike and your stocks can go up, and that doesn't really hedge you. That's where I'm going with that. Hey, Dees. So let's do DOCN. I hope that's helpful. Morning. Where are you from, Dees? I'm on the East Coast, USA. DOCN affirm. Let's knock them out. I don't know if you're from Australia. I think we have a couple of people from Australia in here. Might be you. You might be there. So this is what you need to avoid. See how you have this bar and you have this rejection? That happened to me with this. Okay. Like, that's a problem. That's not, there's nothing warm and fuzzy about that. If you're in this and this just happened, you shouldn't be feeling warm and fuzzy. You broke out, you failed, and you closed at the low. If you flip these levels to the downside, you're going to go to here like super fast. You're going to drop 10 points really fast if this breaks. So I'd be very careful here. Some people are going to say that you're going to have support at the 8-day. I'm going to tell you, you're going to go through that like butter. So this is a very thin name that people have done exceptionally well with. And if we sell off, that's going to sell off. It's going to sell off fast. I'm not trying to be overly dramatic. I'm telling you what I think is going to happen. So I would be really cautious there with that one. So Affirm, there's not much to say. I mean, I think it goes higher. I actually think, the next place I would add to this is flipping. I actually have this in the, hold on here. Here's the top. I'll put it up. I mean, it's not a big secret. That's my top 10 list for the week right here. And, I go over that failed H pattern down here on that video, but you can go look at that video and see all these levels if you want. But while we're here, I'll do it. 126.46. I think you flip that on Affirm. You're gone. Like look, this is an island reversal. Okay. I've gapped up on great news. People thought that maybe they got the shady end, right? Because deals with Amazon are usually one-sided and they're not in your favor. They're in Amazon's favor. So you don't know the terms of the deal. So then people thought about that and they sold the stock down. Then they crushed numbers and that crush was substantial. And then this is what you got from there. So that's everything that you want to say, everything. And that's an excellent quarter. I mean, there's not much more to say about it. It was just excellent. So let's see, see what it does. But that stock did great. So Tesla. Yeah, I like Tesla. I like it still. I mean, look, my stop is 730 on it. I think the trade works, Gaither. I mean, we have to see. I could be wrong. But I don't see anything broken. Like here, let's get rid of all these indicators, right? I mean, look at this. So you can see my concern. That's a concern. That's not the move you want. Now you have a couple days to reverse and go back up. And that may happen, right? See, when everything, here's the one thing I would say to you. When everything's so orderly and we're all talking about a correction, there's other indicators that you can use. I'm not going to get into it all now. But when everything's so orderly and we're all talking about the correction and we're all starting to see the same signs, the probability of a correction drops drastically. And the reason for that is just herd mentality, because everybody goes out there and does what? Starts buying puts, starts selling stocks, start raising capital. So if we're all looking at the same thing, it's probably not going to happen. That's how you have to think about it. Doesn't mean that it doesn't happen. It just means that the probability of it happen will drop. I hope that makes sense. But yeah, I don't like that. That's not making me warm and fuzzy, but I think you could flip up and then go. I still believe that. I'm still long. We did have an options trade on. We made a little bit of money, not much, but we got out and I'm glad we did. If we do have a correction, spy below 50, this time we'll be looking to build a position. Can you look at DocuSign? All right, so let's answer this question. So here's where I'm at with it. Okay, I'm a net buyer in this market. Okay, this market's going to be higher in December than it is now, unless there's something strongly fundamental out there that's going to change. Okay, my opinion is I read a study on the dip on the COVID hospitalizations, and I thought it was kind of interesting that no one's taking that into account. And we're all thinking we're going to go in the winter and it's going to be worse, right? We all think we're going to go in the winter and then COVID's going to be worse. We don't know that. We're assuming that, right? That's what we're going through. But we don't know that. So what if it got better? What's going to happen to this market, right? Okay, it's going to heat up. Energies, financials, they're going to go. But what we have to do is just play the hand that we're dealt because we just don't know anything, right? So let's just go back to March and let's just see if we could find a pattern that maybe we want to look at. Okay. So you kind of have a pattern there, right? So you're at a crossroads. You're at a real crossroads here. And let's just kind of go through this a little bit and focus on these. So I think if you break this trend line, you have just as much issue as if you break this. To me, if you break this and go through this and close below it, you have what I call between 1 to 3 days to revert back over the 50 and go, or it's going to start sloping down and then people start avoiding it like the plague. Okay, so I'll give you examples of this so that you can see what I'm talking about, okay? So you broke it here. That's rare that will happen. Okay. Here, below the 50, and it worked within a day. Here, below the 50, and you were there for a day. Right? You didn't close below it, didn't close below it. So I don't know what's going to happen. I will tell you that on weakness, I'm a buyer. I want weakness. I just don't see it right now. I don't see enough of it to say, wow, the selling's over. But I think we're getting there. So, and Docu is just a hard avoid. So, and I'll just walk you through why. So these are your levels. 315 is what I needed to get through. I thought you could push through 315 and go. I was wrong. It didn't work that way, right? So we never put a trade on. But look at this level. See this 310.51? You went right to that level, just like you went here. And then what happened? The 8, the 21, the 50 all crossed down. We reversed right here. Bearish and that's a bearish engulfing for those that watch that candlestick video, right? Right here. And then broke down. Now the H, and now we're breaking this. So now you've broken that. Okay, that's not where you want to be. Not at all. So I would not be in a big hurry here. Somebody wanted out, and why they want out, I have no idea. But that to me, breaking this level, I mean, these are your areas, right? You're going to 270. Okay, if you break 270, they're just going to walk you down. Maybe you stop at 250, right? Or maybe they take you to, where's that 200? Let me get to that 200. They take you there, 243, right? Right around there. So I think you settle back at the 200 day. I mean, that's where this seems to be going to me. So this is rolling. So we'll see how it plays out, but I wouldn't be chasing that. Yeah, I saw that. Tesla, Google. Let's do Google. So I want to just talk about this. You need to watch this on Friday or Monday. If you slice through this level right here and you break this, that's where you're going. Okay, you slice through this, you're going here. There's no reason why you're not going to go from here and break this. None, zero. So that can happen. So, and what you might want to watch is just watch this. Okay. So, I mean, let me just show you this so you can kind of get a sense of Google and the XLK. All right. So this is your long-term trend line. Okay. So I thought you could get back up here. We didn't. We're breaking down again and we're coming back down to this level. But nothing's broken. We're just getting an opportunity to buy things cheaper. ISRG. So this is, again, stuff like this you need to avoid. This is day one. Now hope sets in, right? Maybe it'll hold. And this is what we were laughing about on Twitter, where you take the steps up and you take the elevator, instead of taking the elevator down, you take the window. You're just straight down, right? I mean, in one day, look at that move. So wasn't earnings, wasn't anything. It was just profit taking. That tells you that this is probably over. Now, have we done this in the past and then taken out new highs? Yes, right? So like, where have we done that? Well, we did it here and we've done it here. So maybe this is the pattern. The only thing that would make me think differently about that is we've broken the 21 day. And as I use the 21 day, and you might want to take a note of this, the way to look at the 21 day is to think of it as who's in charge. If you're below it, the bears are in charge. If you're above it, the bulls are in charge. It's a very easy way to look at that and choose that and use it that way. And I think that that's how you have to kind of focus on it. But it's not something I would chase. METC, great earnings. Yeah, let's take a look. So as always, if you don't subscribe to the channel, please subscribe. We also do daily morning videos, and I keep them posted, and you want to be notified of those. I think they're really helpful the way we map them out. So 957 coming across here. Okay. So you really want to watch this and see if you go. You want to see if you break here, and you want to see if you go. And you've done that, right? So now the question is, what do you do? I mean, Emily, it's a tough one because you've already really moved, right? So you wanted to break this and you want it to go. So what do you do now? Well, let's see if you could find a way in. You go here and you go, geez, well, we're already up 50% from there. So that's kind of chasing it based upon that's not going to work. Let's see if we can find another level that maybe gives us an opportunity. So you really don't have anything there. Maybe there's something that we could look at on the weekly. That might give us some hope on where we could look at this. Well, that's interesting, isn't it? So getting above that level would get you above this and also get you above right here, 1360. Where did you stop at? 1360. This is why it's so important to look at multiple time frames. So that's kind of important. If you flip 1360, which was the same stop as you had here in 2017, that's what you want to say. That's exactly what you're looking for. And we can go back a little further and see if there's more data. And there's not really. So we'll go back to the weekly and focus on that. So Emily, what you'd want to do, okay, you'd want to make sure that you were at 1360, okay, over 1360 before you consider it. If you close below 1360, you want to be out of it. That becomes your level. That's how I would play that. BTBT. Hey, Brian. So yeah, it is just outright avoid. What is this? Like one of the minors, I think. Just outright avoid it. I mean, rally fails, forms an H, breaks the H, breaks the 50, breaks the 8. You break that 21, and you're probably heading back down here. So the only thing holding you up right now is that 21-day moving average. If you break that, you're going to see another wave of selling. You're not going to want to be around for that. AEHR. Hey, Daniel. So here you're seeing the stock break out, right? So here's your breakout bar right here. 860. Okay. You got to go and you got to run. That's what needs to happen here. Look. See where you're at? Break that and go. You've done it. You've done it here too. I mean, look, this is, what are you supposed to do here? Like you kind of missed the mark, right? You've kind of missed the trade a little bit. So you really can't chase this. I mean, the only way you can really chase this is wait for it to get above this and then start looking to put positions on. But that puts you in a whole different level of risk. And, usually stocks like this, the other thing you have to deal with is if you're moving like this and the CEO or whoever wants to, they just put out a what do you call it? A secondary and you're hosed. So you got to be really careful here. I wouldn't chase that. I day traded above 1104. And determining targets, you typically go between two of the next highest resistance points. Depends on the stock, Tobias. Completely depends on the stock. I can use fib levels. I can use trend lines. I can use a variety of indicators, and it really depends on what I want to use and why. So it's not that simple. Can you use that methodology? Yes, you can totally use that methodology to get an understanding of a range and then determine your risk level. Yes, absolutely. PDCO. PDCO. You broke down here. Look, you've broken down here. You formed a bear flag. You tried to break and you didn't. And now you're up over the majority of the bear flag, right? You tried the one day and failed, but you did it on Friday, didn't you? So where does that put us? 35.58. So if you get above 35.58, you're in good shape, right? But is there another trade there before 35.58? So here's what I would argue. If you can get above that level that we just happen to close once, twice on, that just happens to be above the 21 days simple moving average, you might want to buy it, right? That would be my flip right here. I think that's an easier place to buy it. And then closing below the 21 day would just have me out. That's how you could trade it. Oh, you mean when it breaks? I love the video, the H pattern. Can you show me an example of the H pattern when you should short? Like say it was a reverse U. You short when the H breaks is really what you do. If I come up with one and I see one, Ethan, I'll point it out. But you short when the H breaks. When the H doesn't break, that's when it gets very interesting. Yeah, I can go over Amazon. I mean, look, Amazon was something that we had an option trade on and we did okay with, right? But here's the issue with it. Okay. And this is what I was pointing out. Let me get to the daily. And this is what I was pointing out. This is what you're seeing, and this is what you have to watch. So let's get rid of these indicators for a moment. Okay. So I'll throw these back in real quick. We all know we're sitting on the 50 day, right? We all know that. We all know the 8 days right there. Okay. So this was my point. This was my trade. I bought here, and I actually linked that video in here, and you can, I don't know that I'm not going to link it in here, but if you're that interested in Amazon and seeing how I traded this, we made 100% on the options. So we bought them here and we sold them there. I walked through the whole trade. There's an actual video on the page that walks you through the entire trade, how we did it, what we bought, why we bought it, the whole 9 yards. But and I'm just bringing it up because I'm looking at it, and it worked out perfectly. It's just a great example. Here's your wedge line. And then you started getting over your wedge line and everybody started getting giddy. And the one thing that I kept saying was you have this 35.27 here. See where you opened, bonk, 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 bonk. What happens to resistance when you break it? Flips to support. What was it here? It was support. Say it with me. Support, right? Resistance, resistance, resistance. Bonk, bonk, bonk. So yeah, I broke the trend line, but what was the first thing that you have to do when you break a trend line? So you might want to remember this. The very first thing you need to do when you break a trend line like this is you have to get above a higher high. Okay. Well, this one doesn't really qualify because it's got to be the first one to the left. That's here. So we didn't get there. And I understand that you don't want to wait for that, but you might want to wait until you get above resistance. And you didn't. So this was a great place to short. And I'm not so sure being short here is the worst idea. So you have this market rolls, even for a day or two, this could get hit. Now, you get below that 50 day and you could see some selling. Okay. So I hope that's helpful. I think it can. I do. I think you can close that gap. You have to get over that level, though. You have to get over that level. DUOL. DUOL. Start rolling this again to see how deep I am. There we go. So I want to answer this question badly. Hold on, let me get to this. So, all right, so here's your issue. You broke out, and look at where you closed. An inverted hammer. So for those of us that know candlesticks, we know that this is what? An evening star. So if I break below this level, I'm going to come to here or here. Let's just call it this. So I'm at 173. So so let me get this straight. I have the probability that I broke out, didn't work. I have this wick here. It's telling me I've rejected price the whole way. I'm trading at the low end of the range. If I break below this, I'm going to 155. Why would I buy this, right? You wouldn't. So what you need to do is you need to watch that level and see if you get to the 155 level. Okay, but I would not go near that. If I miss your question, please throw it back in there. SC, I saw it in the top 10. Why aren't you concerned about the secondary? The secondary's over, Brett. It priced. There's nothing to concern myself with any longer. They priced the secondary. So there's no reason to concern myself with that. It's old news. BCTX. I mean, wick rejection, wick rejection. Here's your level, brother. You got to get over it. You got to get over it until you get over that level and your volume's going away. I wouldn't go near it, Brett. Yeah, I mean the BBIG trade. Look, you're just hoping that they come out and they pick your stock and they try to run your stock up. I mean that's what you're hoping for, right? So the issue with this is that you're just stuck between this level. We've been watching this level and talking about it. 1132. Here you are again. Could it go up Monday and go run through all this? Sure, but I don't have any signal that's telling me anything like that. I have rejection, rejection. So I can't, in good faith, tell you to be buying that. Apple. So to me, here's what's going to happen with Apple. Okay. Let's look through this in the fundamental side. They lost a lawsuit. They can't go back on that lawsuit anymore. They're probably going to argue parts of it, but apparently that's it. It's over. So they were getting 30% from people on these apps. They're not getting it. They're not going to get it anymore. They're going to have to cut the fee down. Okay. And when they do that, it's going to change everybody's models. And that's why you saw so much selling, not because Apple's going out of business or people are going to buy a new phone or any of that nonsense. The reason for it is relatively simple. Okay. And that's what you have to take into account. All right. So what does that tell us, or what do we do about that? Well, here's my range. Okay. And I broke my range, right? I tried to get above it. I broke down. I would revert to the mean. I reverted to the mean and I broke the mean. Okay. That means I'm probably going to test the 50-day. So you might be down to 147. Usually moves like this are 2 days. And then that's the end of it. Now, I don't know how bad this gets, but you're going to see revisions across the board on their earnings. And so this could be 2 or 3 days and then it's a buy. Right? Use your RSI when your RSI looks like it's reversing, which you're probably not even close to yet, right? But you see this, like straight down is not an option. So if that happens, it's something definitely to watch. But I would be on the long side now. I did a small short trade at the end just to see if I could get it, but didn't do what I thought it might do. AEHR. So let's take a look at AEHR. Got to get over 1104. You got to get over that 1104. I mean, there's not much more to say. Like if you're in at 840, it's up to you what you do with it. So like, do you want to take that risk? I wouldn't. I would have been out of it already. Like when I got here and rejected, I would have drilled into something like this and said, well, that's my level. I tried once, I failed, right? Here's the second day. I'm trying. Here's my rising wedge line. I failed. That's it. I'm done. I tried. It didn't work. Next. So I'd already be out if I was in at that price point. There's no reason that I'm going to wait around to see. And I mean, now if you're trying to wait it out and see if it forms a bull flag up here, you just use 983 as your stop. ZIM faded hard. Yep. And, that's one of the things I want to point out. Like a lot of people, with ZIM, a lot of people were reaching out to me on that one and talking about the breakout and do we buy it now? I mean, I don't know how we could have been any clearer. Like when it broke this level, you had a shot at it going. It went. You don't chase these when they're up 10%. It's the quickest way to lose money. Now, this reversal bar, you need to pay attention to that. Last time it happened was here and we got over it. Maybe that happens this time. Maybe it doesn't. But if I was long this, that's all I need for it to break and I'd be gone. I would be out. I would not be a buyer of that right now. Can you comment on UPST? I meant it was wondering what could be my stops since the market this week. Real quickly, buddy. I mean, look, I took a long position on UPST on Friday. And I'm not going to bore everyone. I posted this on Twitter, but every time I have a bearish engulfing, what happens? right? Every time, well, that's not really a bearish engulfing, but I was pointing out that every time I have like a long revert, which should be a reversal pattern, this is a reversal pattern. This is a reversal pattern. Every time I get one, what happens? I take out a new high. Why is this time going to be any different? So I felt like it was worth the shot because when they work, they really work. So it's worth the shot. I'll tell you exactly what I'm using as a stop. Right. If I break this, I'm out. 268.25. That's what you should use as a stop. AHPI. So you have to get over that 50-day. You have to get over the 50-day. Right now, that looks like a short. Like this is exactly where you could actually put a short on and just, if you got above this level, just close it. Right? Like you could see how this can easily get back down here. I would not be chasing that. I am playing APPS. I'm position building. I feel like it's been beat up. Secondary got bought quick. This might retrace. So you should pretty much try to have these all mapped out swing before you even do them. That's the first thing I would say. To me, I don't see anything here that is remotely appealing. Like anything. You could argue the 8 and the 21 and you're there, but I am not a big buyer of things that are below the 200-day moving average. So the very first thing for me would be that this has to get over the 200-day moving average before I would even consider buying any. Like I wouldn't even think about it until I got over that. I mean, that's your first level. Until you get over that swing, I wouldn't go near it. Hey, Daniel, XELA. XELA. Again, I wouldn't go near this. Like, look, I mean, let's get rid of this for a moment. So here's your peak, failed. Peak, failed. Tries again, failed. Tries again, failed. The only thing you have going for you on this, the only thing you've got going for you is that you're holding this level. Well, you're trying to hold that level. Now, on top of that, and these are smaller stocks, so they can be manipulated. On top of that, look at that trend line. So something's going to have to give in about a week or two, right? Something by September 22nd, 23rd, something's going to have to give. I'm either going to break out or I'm going to try and get above the wedge line. The only really interesting thing is you see the depth of this, right? Gap. This one. See how they're getting smaller? That usually means you're setting up to break out, or you're at least setting up to stop going down. So you might want to watch it, but I would not be a buyer until I got above that level. Hey, James. So the IWM's hit. Like it's just, in my opinion, it's not good. It's a really very simple. It's very simple. It's just not going to work. I mean, you have some issues here. If you break that, you're probably going to the 200-day. So just something to think about. It's definitely not something that I would be getting involved with. CCJ. I'd be very careful buying. I can't be any clearer. I'd be very careful buying small caps. Very careful. Hey, Jack. CCJ. Get rid of this and go here. So you're here, then you break out, then you go. It's exactly what you're looking for. 2508. So, I mean, that's everything that you're looking for, but the breakout's already happened. So you literally have to use this as your stop. So that's got to be your stop. So if you could find a way in and keep that as your stop, you can go for it. That's too big of a risk for me. Okay. And just FYI. So Yeah, you just happen to close under the major trend line. So I'd be careful here. I wouldn't be chasing that. If you can flip 2508, there might be another trade there. And I'm using the word trade, meaning in and out. P-ton, not really. I mean, there's not much to say there. I mean, I can comment on it, but I went right to the trend line, right to the 200-day and right to the trend line. I mean, you want my opinion? Here's to 50-day. This is where you short. The stock's up because short sellers got squeezed. That's why you're up. That's why you've moved. See, when you have fast rallies like that, that's a short squeeze. That's not someone's buying because I have to own it because they're coming out with an apparel line. The fact that they're coming out with an apparel line should raise tons of questions. Tons. Like that's your growth strategy? Clothing. Right? That's not how this company was making money and got all these people involved. And now you want to go up against Lululemon. I mean, it's not a great, it doesn't sound right. It doesn't pass the smell test. It's a great way to squeeze people and get the stock up. And that might be what they're trying to do. But from here, to me, this is a short. Close below that line and you could short it. MNDY. So let's do MNDY. So you can see how that broke, right? So there's not really much more to say there. I mean, that's not something I'm chasing. Like, you need to watch stuff like that. You need to look at your wedge lines and say, did it hold? Did it break? Well, I mean, all I did was draw a point from here to here, and my open just happens to be there going here. So clearly I have an issue, and clearly I'm going to continue to go down. So just FYI, it's not of interest to me. Well, I don't know. Do they have something that they're selling on there? I mean, the ones that went crazy were like this. I mean, because it changes. You see, you have to understand something. It changes all these business models. Like, look at this, right? It didn't hold, but from 8:30 to here. I mean, everyone's business model changes. I mean, picture something like this, right? Why did this go up? Right? Why did you do this? You did this because Match.com no longer has to pay them 30%. Right now, you didn't break your trend line. I don't know what this is. Hold on. But you didn't break that trend line, but anything like that is going to go. Now, I don't know. Does Activision have something on there? Activision's Call of Duty, right? So, I mean, I don't know if they have something there or not that would affect them. What I would say is these pattern here. Let me show you this, because this is something. I don't know what's going on with it, what you're saying, but or like how this could benefit with Epic and how they benefit from that. But look, you know, you can walk me through it if there's something that I'm missing. So 77.81, you're right here, right? And then you bounce. I mean, you kind of formed an H and didn't break the H, did you? Right? So this kind of can go higher now. This may be a bottom. So if I wanted to play this, and I think there's an edge there, you know, you have to, and if you buy these bottoms, you have to be willing to wait. Like, in other words, buy them, let them bounce around, and just make sure that you don't break that 77.34. But that's it. That's your trade. But I don't know how they benefit. Yeah, I mean, I still like AMEH. I'm just concerned. You know, I don't like the action I'm saying. BA, I mean, look, Boeing, if the market goes down, Boeing's going to get smashed. I actually think Boeing broke, right? I mean, I actually think Boeing broke. I mean, every time, all you had to do was short it when it was above the 50-day, right? Find a spot, watch the pattern, short it every single time, right? Except here when these were breaking out in December, January. So I'm below the 200-day. These are rolling. This is done. It's done. I mean, they're going to have major problems for a while, and you're probably going to go to that 160 level. So how would I hedge this? I'd probably be out. Like the question would be, why would I want to stay in this? Right? I have a reversal right here below the 8-day. I can't even stay above an 8-day moving average. Like what is going to happen that you need to stay in this to hedge it? Right? Is it because you're in at like $30 or $50 and you want to hold it? Right? So like the question becomes, why do you want to hedge it? To me, I would just be gone. I would not be in this. Now, if I wanted to hedge it, I would probably be doing it through, a deep out of the money put would probably be how I would do it. Because I won't lose too much time value and decay because it's a slow mover. And if you want to get super specific, JD, on that, just email me and then I'll gladly go over it with you when I have the time. Just email me there, rtate@rtatrading.net, and I can take a look at it for you and we can talk about it and give you an opinion. Oh, you're welcome, Dan. I love doing it. I'm actually having a good time. What's up, Evan? Dash and EDR. So I don't know, man. Maybe it's all the rage. Everyone's going to DoorDash now. For some reason, it was it bombed the beginning of the year, and now all of a sudden everyone's rushing there. I mean, this is pretty textbook stuff. This is beautiful. I've just got stopped out of it so many times. I threw in the towel on it. Frankly, I got stopped out here. I got stopped out up here. I just threw in the towel on it. But this is why you have to keep trying. This looks beautiful. I would be a little concerned about this bar on Friday, but you see this is exactly here. Let me get rid of all these lines and point this out to you. So what you want to see is see how they're gapping. They got to keep going. So 201.99. You're above it. There's your support. It actually looks great. I mean, it looks great, man. There's not much to say about it. I'm surprised it's acting this well. I mean, we could look at it on the weekly, give it another moment. Yeah, I mean, look, you have an all-time high close on the weekly. Like, it's really hard to knock that. You have all these wicks up here, but you've never had a close like this. So, and volume's accelerating. It's not going down. Something to think about for sure. EDR. Yeah, I mean, this is the one that owns UFC, right? It's like part of their conglomerate. I mean, you might be done going down, right? Here's your wedge line. You broke the wedge line. Now you're here. I don't know. I wouldn't be buying that. You're welcome, Percy. I wouldn't be going near that. You're welcome, Bags. I think you have to really watch that stock. Building position for Twilio. So rallies, fails, rallies. I would not be building. This is the week. I would be avoiding this, man. I would not be position building right now in this. It's a great company, but this is a weekly chart. This is an H. And I'm going to give you the daily in a moment, but I just want to point this out. There's a 3-week chart. I just broke that down on the H. It means I'm going to here, which means I'm going to test the H. Now look at this. right? So I'm getting worse. I'm not getting better. This is setting up to break. So now if you look at this on the daily, you can actually go through this and see. This is setting up to break big time. So if I break, just so we're clear, so you understand how to use this. So if I break this 331 level, I can count from the top of this to here and get roughly 40 points of downside. I'd be really careful doing this right now. So the indicators in for more clarity. I'm below the 8, the 21, the 200, the 50. Okay. Here's, if you want to know at the bare minimum what you need the 8 and 21 to point up. Until then, I would not position build because you're going to be able to get your stock cheaper. When the 8 and the 21 start pointing up and cross, even if you're below the 200 and the 50, you can start building. Yeah, I love that play too, Swing. But D, we all have a lot to learn. I learn every single day. I've been doing this for over 2 decades. I'm still learning. Tesla, I like it. Yeah, I think we're getting better with this. I'm getting better with it. I'm going to have to wrap this up. Let me just do EXPI and RBLX and on. EXPI. I still have to do some work for the community, and I got to run a bunch of charts tonight. I got kind of sidetracked today, so I'm going to have to jump off. Only do the hour tonight, which I only try to do an hour. You know, I think longer I start losing people. Maybe not, but I think the hour is helpful. We'll review everything again tomorrow at 8:45 or 8:15 actually, and I will every morning at 8:15. We're doing a show now, so subscribe to the channel, click your notifications. I would say this. Even those videos, if you're not watching those videos and you're watching them, watch them at the end of the day instead of the post video I used to do, but watch them and just let them play because it'll show you how what I said that day, how it played out later in the day. You can actually use it as timestamps to see if I actually know what I'm talking about and what happened. EXPI, see this level? See how you can't break it? What did we form? An evening star. What happened? Sliced right through it. No need to go near this. Throw in your bells and whistles. It clearly tells you you're having an issue. You just got to let it play itself out until it breaks that line. On. I mean, these are the kinds of names that are going to work, man. This looks like it's going to work. That was the other one. I think AMCR is also in that space. No, that's not it. ACR. What is that symbol? I'm forgetting that symbol. ACMR. Yeah, that's it. So like similar stuff. And I think that space is on fire, which is weird because the SOX doesn't look great. But look at this. I mean, that's as clear as you can get. Look at the volume. It's a simple trade. Simple. You break that low, you get out of the way. That's it. That's your stop. Break 46, you're gone. So I mean, you don't even have $1. You don't even need $1. You could buy it here if you wanted to, and just if you get stopped, you get stopped. It's not that big a deal. 47.59. If you want to wait for that, now you're risking $1.50. So it trades up to you, but I like that. You're welcome, buddy. Let's just go ASML, AMKR. ASML. I like it. There's nothing to say. We're in this newsletter from 8:09. I like it. There's nothing to say. Am I glad we reversed the other day? No. I wish we didn't do that. I really wish we didn't do that, but we did do that. AMD's toast. So AMD's going back to 50, and then it's going to have to figure out what it wants to do, but it's done. That was really disappointing, that move. AMKR. I thought I went over this one. Maybe I didn't. If I didn't, I apologize. Let me just go take a look. You tried to rally and you failed. Okay, this chart pattern is everywhere. So you got to watch tomorrow. Tomorrow's going to be wonky. I love EXPI. So let's just see. Is that it? That's what I would cover. All right. So let me just see here. Let's just do. So Nike, let's do Nike now, and then I'll gotta get out of here. Swing, I can go over that later. I can go over it tomorrow for sure because I'm going to have more data tomorrow on what I think the week's going to bring. Nike, you got to watch. 50 days not being respected anymore. See how you can't get above that? You have to watch that. But I can definitely go over that swing tomorrow morning, 100%. Oh, you're welcome, SF. All right, I'm out of here, everyone. I got a ton to do. So have a great night, everybody, and go Birds.